everyone, and welcome to our YouTube channel, Moneyline with Nancy at TV. In case you're not a subscriber yet, please do subscribe. Just press the subscribe button as well as turn on the notification bell so that you can get notifications when we upload our videos. Don't also forget to subscribe and join, follow, like our other social media platforms. Of course, you're seeing it right about now. Don't also forget to share this video across your platforms. Enjoy the video. My guest is joining me right now from Paris. He is Lluis Dalmau. Hello, Lluis, and thank you for joining us today.
Hello, good morning. Thank you for having me.
Good morning. Lluis is an economist for Africa and Middle East at Alliance Trade. So I think we should just get to it, Lluis. How was Africa in 2024? Of course, you're the person that really, give us a bird eye view of how, as a continent, we performed in 2024.
Sure. Africa in 2024, I think, was still recovering from multiple shocks that took place in 2020 with COVID, and then later on, some countries were also very affected by the Ukraine shock, and even some, such as Egypt, by the shocks of the war in Israel. So let's say that in 2024, Africa was recovering from that, was still walking away from those shocks. We saw a small decrease of GDP growth during the year from previous years, just because some countries were still managing that new international situation, an international situation in which saw an increase of rates because inflation was going up throughout the board. Decrease, for instance, in some commodities, other commodities went up. So each country was kind of dealing with the international situation in a different stand. Now, if we look forward, if we look towards 2025, we see that some of these international indicators, some of these international, let's say, factors are changing. And I think countries are also, and the leadership of some countries are also taking kind of a break to see what's going to happen. We've seen over the last 2 weeks with Trump in the White House how things can change quickly. So I think from now it's a wait and see to see what could happen moving on.
Do you think that Africa as a continent that we're prepared, and how poised are we to face this year and perhaps the headwinds that will come in this year, as well as the economic remnants of last year?
Africa is, as you know, is very different. Each country is in a different position. I think there were countries that were much more ready for what was to come. Countries more diversified, countries that have been able to accumulate larger amount of foreign reserves, succeeded much better with the shocks that happened in the past, such as Cote d'Ivoire, for instance. Other countries that unfortunately hadn't had the chance to either accumulate as much because reserves were already coming from a low point, or because they were in the midst of some either depreciation period or their debt profile was in a very weak place, that were not able to do so. And so during 2024, we saw, for instance, just as Nigeria or Ghana or Zambia having to go through a very difficult period to enable to basically reposition themselves, and this year could be more positive for them.
Which countries on the African continent were the underdogs last year, for example?
The underdogs, we could say that I think some countries went through a very rough time. As I mentioned, countries that went through let's say, a sovereign default, such as Zambia or Ghana. Yeah. These were the countries that experienced the most harm because inflation went up as the devaluation of their currencies took place. And so I would say these countries that had a weak spot, that their profiles were in a weak spot, were the worst performers. They are now in a different place, So it will be interesting to see how these countries from this point start working. We have seen inflation starting to go down in Nigeria, for instance, in your country, but also in Ghana, in Zambia. We have also seen just yesterday the release of some PMIs that brought some light, for instance, or some stability, let's say, to Nigeria and to Zambia. So these, as you mentioned, these underdogs in 2024 could see themselves going to a better place in 2025. But it's still going to be, I think, a complicated year full of challenges for them.
So let me now put this question this way. Let's take a look at region by region: East Africa, North Africa, West Africa, the SADC region, and all of that. In 2024, which region actually performed better?
2024, I think, was a relative positive year for Eastern Africa, and also for some countries, even though South Africa was not the best performer, but for Southern Africa as well, was a relative positive year. These are two regions that are not as, let's say, that are a bit more diversified, that the economies of these countries are a bit, don't depend so much in one only commodity. So these were the countries that were able to absorb more the shock. These are all also nations that tend to have a flexible exchange rate with the outside world, even though South Africa, the Southern Africa region is a bit more different. And so, yes, kind of these two areas would be the best performing last year. Of course, for instance, in Eastern Africa, we saw important and relevant growth stories in Tanzania and Kenya, which was positive for these countries, even though Kenya went also through some difficulties.
If we take a look at issues that are factors that drove growth in 2024, for like this region which you've mentioned, do you think that those factors are still there this year, bearing in mind that there's a new sheriff in town in the United States of America, and of course, African countries do have bilateral relationships. Each African country have bilateral relationships with the United States of America. There's also AGOA, so those growth factors, will they still be growth factors in 2025?
Each country is a different story, but I would say that some of the factors are still going to be there. I think until this point, we have seen the new administration very focused on its main trade partners. I think until now, with the exception of South Africa, Africa is still a bit out of the radar for President Trump, and that could be a positive moving forward. I think, for instance, countries, as we have talked so far, in East and Southern Africa, the capacity to grow is still on the table. I think moving forward in 2025, I would not be as much concerned about these nations that are a bit more diversified. I think maybe if we move towards the other side of Africa, towards Central and Western Africa, I think these are countries and two regions that are a bit more worrying for what can happen, mainly because of their dependence on oil in some cases, and their dependence on some specific commodities, and also the threat that brings coming from their dependence on or their exposure to the US dollar, which is something that we're going to have to keep a very close eye on moving forward.
Apart from the exposure to the United States dollar, which is also an exposure or a downside risk concerning adding more pressure on debt in Africa. Of course, we also saw a few African countries last year going to the IMF, for example, for bailout. Ghana is one of them, which you've mentioned. Apart from that exposure to US dollar, what other downside risks do you think are facing African countries this year? For example, in Nigeria, we've been suffering high inflation rates, not just high, stubborn and very sticky, that refuses to go down at the rate we want, despite interest rates being elevated in the country. Is inflation is a stubborn issue in Africa?
You see, I think I think in some countries inflation overall is going down. I think we've seen a peak of inflation last year that most likely were, if things can happen, but the trend is a downtrend from here. However, as you're saying, the rates are not falling as fast as some would have hoped, and it's still very painful for many Africans to live through this period of high prices. Then, moving forward, as inflation starts normalizing, I think we will see a decrease, but it will remain an important topic, as you mentioned, in Nigeria and or other countries that faced stark devaluation last year, just like Ethiopia, for instance. Now, going to your point on what we need to think of moving forward for this year, besides the exposure of the US dollar and for instance, inflation, I think other aspects that we need to keep an eye on are going to be the price of commodities. As I mentioned, the price of oil is a very important indicator for many countries in West and Central Africa. We're going to have to keep as well an eye on what happened with trade. Not only, you were mentioning AGOA, not only because of the exposure of Africa to the US market directly, which is relatively small, but the exposure of Africa to the US market through other trade routes, for instance, in China or in Europe. So that's going to be another aspect, another second aspect that we're going to have to keep a close eye on. And then finally, I think related to the US dollar, it's going to be the moves of the Fed. We see already a Federal Reserve in the United States that has been moving slower and has been lowering the policy rate in a much lower pace, and that has direct consequences for African economies and for basically debt throughout Africa. That means that the yields are going to remain higher. That means that governments are going to have to face higher costs of servicing their debt. And it means that also some countries could still run into major complications in terms of their repayments and basically moving from this point. I think, as you mentioned, we said inflation, we said oil, we said the Fed and the US dollar are going to be the four aspects, international aspects to keep in mind from this point onward.
How do you think that perhaps we can also demarcate this into regions, for example, because my next question is around interest rates and the various central banks in Africa. For example, in Ghana, they do have the new Bank of Ghana governor because of course, President Dramani Mahama. John Mahama is now the new president of Ghana. You know that Ghana has suffered high inflation also. The cedi has been volatile against the United States dollar. In Kenya, is a different kettle of fish. We saw what happened last year around the unrest in Kenya. Even in Ghana, the issues around e-levy, the financial reforms, and all of that. So if you take a look at central banks' policies around interest rates adjustment, what is your outlook this year? Bearing in mind actually also what you mentioned, that the Fed is one institution to watch this year, because whatever they do affects the US dollar, and that also invariably affects how other central banks adjust their rates. So what are the things that we should look out for this year? For example, in Nigeria, we had a forum last week. The central bank had a forum, and they did title it Managing Disinflation. So that means the Nigeria Central Bank is looking at disinflation this year. How would you put all of that in terms of Trump being in the White House, Fed Chair Jerome Powell saying, okay, at the last meeting, they left rates unchanged. So what should the central banks in Africa be looking at now?
Yes, I think there's two big aspects to take into consideration right now. One is that central bankers across Africa, I believe, are, when they look at the Fed, are in a bit of a wait-and-see mode.
Yeah.
Why? Because we don't know what could happen, and President Trump could come up with new demands, new tariff threats in the next few weeks. So that's first. First is, let's see how this new administration gets in place and sets its own policy priorities moving forward. The second aspect, which is related to the Fed directly, is that Jerome Powell is still going to be around until next year, which this should bring some sort of stability to policy rates across the board and to the US dollar. So in that sense, this year we should not expect very volatile moves from the Fed, but more of an orthodox and a continuation of what we have been seeing. A question mark will be what happens next year after Jerome Powell goes. So in that sense, I think that's the first point where central bankers across Africa are looking at what's happening. Then, in terms of, as we mentioned before, in terms of each individual country, each one has their own set of domestic issues. Inflation, as you mentioned, is a big one for Nigeria, and I think the central bankers, for instance, of Nigeria, of Ghana, are trying to identify what's the soft, where's the sweet point in terms of being able to start bringing down rates once inflation starts to really go down. So we are going to have to see how that evolves. We have seen a beginning of ease in terms of inflation in some of these countries, and probably we will see some ease on the policy rates later on this year. But for now, as I mentioned, it's a wait and see and see what happens coming from Washington.
As someone that watches Africa very closely, and I know, of course, you talk to people around the world, is there a sense of credibility on the authorities, especially fiscal policy makers on the African continent?
I think credibility is there. I think, yes, I think if you see the technical skills of many people working in central banks and the ministries, there are highly credible and skilled people working behind the numbers that we see and the headlines that we see. Now, political priorities are a different thing, and each one's interest is another thing. Having said that, of course, Africa, as many countries across the world, face issues regarding corruption and regarding mainly corruption, and that's something that Africa, as countries outside of Africa as well, have to deal with. But when it comes to credibility, I think yes, many African countries are full of skilled and credible leaders in front of these institutions.
I was taking a look at your report that you released, Country Risk Atlas 2025, titled Repeat and Rewind. Of course, you are also part of the authors with some of your colleagues where, you're looking at each country, taking them one by one. Let me see if I can isolate some. For example, you mentioned Cote d'Ivoire earlier, and you did say that Cote d'Ivoire is doing well. I think there's a presidential election this year, if I'm not mistaken. And you're forecasting robust growth in a presidential election year. Part of the weaknesses that you mentioned in Cote d'Ivoire is that industry estimates suggest that Cote d'Ivoire captures only around 4 to 6% of total revenue from cocoa. You know that this is one market that is quite heavy on cocoa. You also mentioned Angola. You mentioned, I think, Algeria. These are countries that have mineral wealth. How do you think, as well as even agricultural wealth like Cote d'Ivoire, which I mentioned earlier, how do you think that, what are the impediments, actually, let me put it this way, what are the impediments for us as a continent not to be able to generate as much wealth from our mineral as well as agricultural resources?
Yeah, and actually this is something very interesting that you're raising, Nancy, because so far I have been talking about oil exporters and how oil is so relevant in Africa. But as you mentioned right now, there's plenty of countries that are not oil exporters. And so in a world where the US dollar is strong, and a world where the oil price is still kind of relatively in a stable position as it has been over the last 6 months, this is going to be a difficult year for countries that are commodity exporters, but basically non-energy commodity exporters, like the ones that you have mentioned. Even though Cote d'Ivoire with the cocoa prices is currently and has been for the last year another story. But yeah, minerals and agriculture are mainly the main source of foreign, besides oil, of foreign exchange and foreign reserves for many of these countries. So these are very key. These are very key commodities for Africa and countries across Africa to actually be able to pull through their reforms and their basically their economic development and their economic policy. This is something that we're seeing, for instance, in Senegal, in which the new administration and the new parliament are setting up a development plan, a long-term development plan, using and tapping the new discovered and coming online of gas fields and oil fields. So I think the question that you're raising is very important, and it should be a question that keeps our both us and the leaders of Africa in our mind, which is how can African leadership tap into these resources that are so important for entire supply chains across the world, to actually not only just bringing FX and bringing dollars for stability, to keep this macro stability, which is essential, but also to actually bring it down to let's say the micro level and improve livelihoods and improve the situation of many companies that want to continue to export and want to and want to compete at an international level. So I think the question is the key one moving forward, and it's gonna, I think, keep many of us awake and studying the region for a long time.
Let's go back to Trumponomics a bit. You did mention that Africa could just be out of the radar of President Trump, apart from what we heard was it 2 days ago from President Trump concerning South Africa, and the South African president responded to him. I did also hear you earlier say that perhaps Africa is adopting a wait-and-see mode. What kind of reaction, what kind of reaction, not necessarily reaction, what kind of preparation do you think that Africa should have, especially looking to the next 4 years when you have a President Trump in the United States that says America first? I'm asking that question on the premise of there's an African Continental Free Trade Area. I also know that there's a PAPS system, talking about the payments system that is being looked at in Africa to be able to facilitate payments amongst us. You also do know that as Africans, our contribution to trade globally is just about 3%. It's also been said that we may not be trading with ourselves as we should, even though we have almost the same commodities across Africa. So how should we position ourselves as a continent with Trumponomics 2.0?
Yeah, I think that's a key question, and I think just like I would say at this point with any leader, and not just Africa but everybody. I think President Trump takes personal relationships very important, and he's willing to negotiate. And as least as we have seen, he puts, as you mentioned, America first, and then everything comes after. And so, for instance, we saw, as we have seen over these last few days, we saw China, Canada, and Mexico being on the spotlight. However, I don't know if you saw yesterday, or maybe it was today actually, earlier this morning, India, the leadership in India has told the White House that they're willing to reduce some of the tariffs that they have on some specific imports from the US.
Yes.
And they are also willing to accept illegal immigrants that Indians that the U.S. might have, and basically to take them back to India. So I think we're entering the next 4 years in a very transactional modus operandi, let's say, and I think presidents across Africa that could tap into that would play on their benefit. Is that for the best? Is that the best case scenario for the world? Probably not. But this is how things are working. Seem to be working right now, and so I think that's going to be key for the next 4 years, in which leaders are able to get into that exchange with the United States. And then you mentioned the Africa Continent Free Trade Agreement, which I think that should be part of the answer to the question that actually you were also raising before on how do we tap into this growth for Africa and basically Africa prosperity made in Africa. I think that's kind of the answer. However, a free trade zone just like that, it's not going to resolve all the problems for Africa. Why? Because until this point, the trade exchanges that the African continent has done are, unfortunately, and a majority of them, of course not all, very faced towards bringing raw materials into the international supply chains. And so a lot of, for instance, the physical infrastructure that's in Africa, it's actually, as you know probably better than me, it's already made for instance, for a mine to reach the port and the port to export that. And so without proper investments, for instance, in actually being able to refine that mineral, or as, for instance, what's happening in Nigeria, or started to happen last year on an oil refinery, these kind of projects are key to actually make this change. And then for Nigeria, for instance, to start exporting not only unrefined oil towards Europe, and then it can be refined, for instance, in ports in Spain, but it can actually start exporting oil to other refined oil to other countries in which it has this free trade agreement with. And I said oil, which is not the best example, but that can be said for anything. For instance, cocoa that you mentioned before in Côte d'Ivoire, it's still difficult to this day to find the best ready-made and made in Côte d'Ivoire chocolate in Ivorian stores, because everything is exported and it's refined outside. So I think these key investments to actually being able to treat the raw material in-house, I think are key to actually make the Africa Free Trade Agreement a success.
Okay, in just 1 minute, what is your outlook for FDI on the continent this year?
Just 1 minute. Let's say that it depends on the rates that are going to take place or that are going to be implemented by the Fed in the United States.
Okay.
As we see a slower decline of rates, I think we're also going to see a slower increase on FDI towards Africa.
Okay. Luis, let's zero in on Nigeria a bit. And I'm looking at your report here, of course, which you released earlier, Country Risk Atlas for this year, Repeat or Rewind. And when I went to Nigeria, you listed many countries looking at their risk and all of that. It's very interesting that Nigeria, according to your research, is D3, sensitive, risk for enterprises. And just after Nigeria, I saw Norway, where Norway scored, of course, NN, of course, our name. So we go, Norway is just after us on your report. Norway is AA1. And low risk for enterprises. So for Nigeria, it's D3, where some other countries are C. And let me just read out to our viewers so that you can explain what you and your colleagues are seeing for Nigeria and what are the risks, the strengths, and some of the things we need to do this year. All refined domestically and debt discipline present an opportunity for the African giant. Our GDP, of course, is 362 billion. We're world ranking number 42. We're expecting a rebased figure anytime soon. Part of our strengths, you said, rich in natural resources from hydrocarbons to mining, low levels of debt. That's part of our strengths. Then biggest population on the continent, thriving services and agriculture sectors. But the weakness, The thumbs down there include terrorism presents a major threat to northern provinces, long history of economic mismanagement and corruption continue to affect perceptions of doing business in the country, structural imbalances. So speak to us about what Alliance is saying concerning Nigeria, and how come we are just D3? That's not a good grade. Sensitive. So people should be a bit sensitive to us right now.
That is not a good grade, and I
It's
hope to
not.
be able, and we hope to be able to actually bring it up and improve it, because I do see great opportunities for Nigeria. And maybe going back just to what I was mentioning with the refinery, the biggest refinery in Africa. Well, this is a success story. It also has to be said that this refinery, to basically put it in place, went through a lot of trouble. Went through a lot of trouble that has also meant to other possible investors that take maybe as I was mentioning before, let's wait and see to actually to continue these kind of investments in the country because of the complications around corruption, around the slowness of being able to put this into life. Now, this is a success case, and hopefully it will continue, and it will enable it will enable other companies to follow step and follow through. But yes, I agree with you. I hope that this year ends up being a more successful year for Nigeria and many other countries, and actually these rates can be brought up. But basically, what we assess is also the ease of the companies to actually do business and access FX. And so, of course, as you know, last year, or the last few years, we've seen a massive devaluation of the naira, and that has brought also complications for international companies that are set in Nigeria. And so that's something that needs to be taken into consideration. Now, I think it has been over the last month, the naira has been appreciating, has been doing much better. So we hope that this continues, and we can actually revise it.
What other things do you think that we should do to be able to prop up the naira? Because even in your report, you noted that the naira depreciated about 40% in 2024. And inflation in Nigeria, one of the worst on the African continent. So, what other measures do you think that the central bank should take, perhaps also supported by the fiscal policy side, to be able to prop up the naira this year?
Yes, it is never only one one magic one, right? It is also it is always a combination of different aspects and different factors. Yes, I think continuing the credibility of the central bank is just key, and I think continuing or allowing basically the naira to fluctuate and not doing anything to harm it is also key to continue it. As much as the devaluation was very harmful for society and for people, it was unfortunately also a very necessary move in macroeconomic terms. Before the devaluation, with the parallel rates that Nigeria had, were also not allowing the country to actually serve its own companies with the accurate exchanges. So I think this was an unfortunate but necessary first move. Then, as you mentioned, the fiscal has also been doing some aspects to basically support Nigerians in different ways. Even though that also meant taking subsidies from the oil out. But I hope the refinery here could step in and make a positive impact. But yes, I think the key will be to make sure that, first of all, corruption is not a stopper and it's not a block moving forward. And second is that that the leadership is able to actually make these necessary and important investments in the country regarding infrastructure, and something that I haven't mentioned, and it's actually the most essential in the long-term development, is education. And I think making sure that Nigerians have access to the right education, not only in university, but also in primary, etc.,
Yeah.
is key for the country to not only grow for the next 2 years at 5%, or I think at the moment is we're projecting 3% growth, but actually sustaining a growth over the next 20 years that just brings up the entire population or at least the majority.
Okay. One word for Africa this year from you. One word for Africa this year from you. And perhaps, are there key countries that we should watch? Because there are elections also this year. Very quickly, 30 seconds.
Yes, I think Cote d'Ivoire is a country to watch.
Okay.
I think Senegal is also a country that needs to be kept an eye on because it's very, very optimistic on what's happening, but also they are in a very complicated fiscal position. I think I will also be keeping an eye on Tanzania in the positive side, and let's say South Africa and Ethiopia are going to be interesting cases on what their leadership is able to do from this point onward. So one word, I would say, things are looking bright, but let's make sure that we keep our head focused.
So focus should be the word. Focus. Thank
you. There you go. Much better.
Thank you very much, Lluis. It's been so nice joining us today, and I hope to talk to you soon again.
Thank you, Nancy. It's a pleasure.
Thank you.
Talk to you very soon.
Thank you very much. I've been looking at the African economy this year, and our guest has been Lluis Dalmau Talos. He's the economist for Africa and the Middle East at Alliance Trade. That's the much we can take today. Thank you all for your company. As always, please join me again tomorrow, same time on the station. I am Nancy Naji. Be the best you can be, and be the change that you want to see. Thank you for making it up to this minute watching the video. Thank you all. Don't forget to subscribe to our YouTube channel, Moneyline with Nancy TV. Like, follow all our other social media platforms where we keep you up to speed with fantastic interviews, as well as markets, personal finance, business, and economy information. This is the best place to be. I'll see you all again in the next video.